Morning, Hayden, and welcome again to What's Up Wednesday. Thank you very much for joining us today. I hope your last week has been busy and fruitful. How have things actually been going with you guys?
Hi, Gary. Always good to catch up. So thanks for having me. And yeah, it's been another very busy week. As you know, things never stand still in the financial world, so keeps us on our toes.
That's phenomenal. So guys, for those of you who haven't met Hayden, Hayden is the CEO of Foundation Fund Managers, and we're going to be chatting a little bit about some of the market movements that we've experienced in the last week and what we predict for the week to come up ahead. So Hayden, just to kick off with, last week the Rand was around about 1360-ish to the dollar. This week, again, we're sitting at about the 1360 mark. What we've seen quite a bit of activity in terms of Rand volatility in that week. Can you maybe just shed some light on what's happened in this last week?
Yeah, so it's quite interesting. We seem to be falling into a pattern where every time you and I speak, the Rand's at a certain level, the same level it was the previous week. But in the interim, there's been a lot of movement. So hopefully next week we get to have a chat and we're not sitting back at 1360, trying to understand what's happened. But last week, being the first week of the month, the first week of any month is always dominated by US jobs data. Of course, the dollar dominating the global currency market. Every first Friday of the month, they release what they call their non-farm payrolls report. And it's basically a recount of how many new jobs were created over the prior month. So this being the first week of June, we were looking at the report for May. The Rand sitting at around the 1360, 1370 mark going into the jobs report and drifting slightly weaker because there's always the speculation that the US is going to put together a huge number. The previous month, the forecasts were for 1 million new jobs. And if it is a significant number, that means that the Fed, well, the speculation is that the Fed will be forced into tightening monetary policy quicker than they've been messaging to the market up until now. But for the second month in a row, we had a miss to the downside. 650,000 new jobs was the call for last Friday, and the actual figure came in at 559,000. So still a massive number of new jobs. South Africa would love to put on, call it 560,000 new jobs in a month. But from the US's perspective, it was below what the market was expecting. Not just once, but twice in a row, because the April figure came in well below the forecasts. Two data points are now pointing towards a trend in weaker than expected labor or job creation in the US. And that then allowed the speculation around the Fed being forced into moving sooner than expected just to cool off a little bit. And as that expectation or that speculation cooled off, so did the dollar get sold off, because effectively it means that there's no threat to the Fed having to hike interest rates anytime soon, at least based on this set of data. And the dollar index plunged, sending the Rand from 1365, I think, on the day down to 1341, 1342. Oh. So it was quite an impressive move, and we stayed there for a couple of sessions after that.
Yeah. Brilliant. So, I mean, the Fed's move to increase interest rates is very heavily dependent on jobs data. Jobs data, if it's going to be poor, we're going to be sitting in a situation where the Fed will have to increase interest rates.
Yeah, so I think actually the opposite. If the US jobs data comes in strong, so the Fed's got a dual mandate. They look at labor health and they look at price control. Labor health being what's the unemployment rate. That's, at the end of the day, the yardstick that every labor market is measured by. Unemployment has come down from 13 or 14% at the pandemic highs down to, I think it's about 5.5 or 5% now. So they've made significant inroads in that space, but they've got to get down to below 4% to be considered as fully employed. And so the bigger the jobs number, the closer they get to full employment. The closer they get to full employment, the quicker the Fed's going to have to move. So whenever they have a miss to the downside, that means it actually means the Fed can pump the brakes and the dollar then falls back as a result.
Fantastic. So you mentioned earlier that we pipped the little 1340 mark to the dollar during the week, which was very exciting for guys that were wanting to get some money offshore. but we didn't get anywhere near the 1330 mark. We seem to bottom out at that 1340 mark. Is there anything in the markets that we are looking at that's maybe putting pressure on the rand from the dollar's perspective? What is actually happening there?
Yeah, so yeah, we bottomed out at 1340, 1341, weren't able to make a move into the 1330s. The trend for the rand in the last while has been a strengthening trend. So maybe that'll happen in the coming sessions, but for the time being, it's off the table. It hasn't really been a dollar strength story that's pushed us back into the 1350s and 1360s, as far as I can see. It's actually been two catalysts outside of the US. First being in China yesterday. Their import-export data came in weaker than expected. China, of course, is a massive player in the emerging market space. They gobble up resources that we export. They then manufacture goods that they then in turn export into the developed world, as we all know. And so when we have a miss on the imports and the exports for the month of May, it signals a slowing down in their activity, which means potentially a knock-on effect to a slowing down in our exports to them as a trading partner, and that hit the rand. I must say, I think the market was rather harsh in their assessment. China's exports came in below forecast, but still grew by 27.9%. And their imports came in below expectations, but still grew at 51.1%. I mean, these are crazy numbers that they're growing by. But because it's below expectation, the market sees it as a miss, and we feel a bit of negative sentiment. So that was the one factor. But the other factor is it's widely been spoken about that profit taking is underway. The rand is by far the best emerging market currency against the dollar over 2021. I think as far as 9% in gains for the year so far. And then Friday's move to, from 1350, 1360 down to 1341 was a significant move. We've got a couple of risk events on the horizon. And so traders were just booking profits, selling rands, buying dollars at a cheaper rate. Obviously, when you sell the rands, that floods the market with rands and sends us weaker.
Okay. So we've always had one eye on our economic calendar when trying to understand all the rand movements. Is there anything at this point in time that really stands out in the next few days that we need to be mindful of, Hayden?
Yeah, for sure. As mentioned at the top of the chat, it's never a dull day in the financial space, and the next few days are no different. Locally, this week, we've got two major data releases. One's actually already gone past. It came out yesterday. That was our Q1 2021 GDP print. GDP, obviously an important stat for us because we need to try and claw our way out of what looks like it could be a debt spiral. There's only two ways to do that: earn more money or spend less money. And spending less money with our public sector wage negotiations is going to be a difficult thing to achieve. So we need to earn more money. And so at 4.6% annualized GDP for the first quarter this year, that came in well above what the forecasts were for 3.2%. And that's a great stat for SA. And then tomorrow, we've got our current account, also for the first quarter of 2021, current accounts announcement. Again, this is likely to be a positive number. Our exports have been outperforming hand over fist at the moment. I mean, really, the containers leaving or the ships leaving SA have been full with all of our metals and resources that we dig out the ground. And that's pushed our current account surplus into the hundreds of billions of rands. Again, should be a positive for the rand. However, unfortunately, there's a chance that these good data sets are not really going to register for our currency. And that's because we've got some major events coming up overseas. First of all, we get inflation numbers for China, Europe, and the US tomorrow. China and Europe, not really that important. Definitely not China. Europe, maybe so. But the US inflation print is going to be top of mind. And then later in the day tomorrow, we get the European Central Bank's monetary policy meeting. And that's followed by the Federal Reserve, the central bank in America, their policy meeting next week. Effectively, there's two themes on the go at the moment. Is inflation out of control, and we'll see that tomorrow. The US's quarterly uptick is forecast to come in at 0.4%. If we see a number significantly higher than that, then speculation will mount again that the Fed is going to be forced into tightening monetary policy, and that's dollar positive if they do that. So basically the Rand's waiting to see what happens with inflation. Is inflation within reason, or is inflation a lot higher than expected? And if it is higher than expected, we can expect a couple of difficult days.
Yeah, no, that's fantastic. Thanks for the insight, Hayden. That was very, very good. For those of you who would like to get in contact with Hayden, please just look onto the foundation website, and you can also get hold of us at Quattro. But Hayden, thanks again very, very much for today. And I really look forward to next week, Wednesday, when we can see what's panned out with all our economic updates internationally. Thank you and have a great week.
Have a good day, and we'll chat next week.
No, wonderful. Thank you, Hayden.